The S&P 500 bulls had a terrible week. The S&P 500 was down 7.05%. It was a huge down week for the S&P 500. So we're going to look at a few things today. Number one, the number one sign that you're investing the wrong way. Number two, we're going to look at a chart of the S&P 500, look at the price action, and then finally, we're going to get into some of the nitty-gritty of this week's operating plan, what we plan on doing coming into this week of trading. So number one, the number one sign that you're doing it wrong. It can be this simple. Don't overcomplicate it. The number one sign that you're investing wrong is if you are worried about the stock market direction. If you were sick this past week that the market was going down, you're doing it wrong. If you were worried that it was going to go up, you're doing it wrong. If you were worried that it was going to go sideways, you're doing it wrong. If you are worried about any market direction, you're not doing it right. The fact is that just like there are many ways to skin the cat, there are many ways to invest. You have different strategies, you have different tactics, you have all of that, from position sizing, all the way from the position sizing to different investment vehicles, to different asset classes, and nuance, and a lot of nuance in there as well. So not one strategy is better than the other or any of that. It comes down to investor philosophy. Philosophy is important even though many do not have it, especially when it comes to investing. What is your philosophy about the markets? What is your philosophy about wealth? What is your philosophy about money? What is your philosophy about the different investment vehicles? All that is important. It's important because from that philosophy you derive beliefs, and from those beliefs come action. So look, it comes down to this. You've got to have actions that you can take. And if your philosophy is not lined up with your beliefs and your actions, it will be very hard and you will be worrying about the stock market. So the number one sign you're doing it wrong, you're worried about the market. It's going to go up, it's going to go down, it's going to go sideways to different degrees. That's the way that it is. So if you're not prepared for that, then something is amiss. All right, and here is a look at our chart of the S&P 500. Like I said earlier, down over 7% for the week. It was a brutal, gut-wrenching week for the bulls. Bears controlled it all. You can see right here, opened up, and the bulls never really even had a chance throughout the whole week. Met our initial target, sliced right through it, and halfway down to our secondary target. So a few key things here. Obvious break in the trend line, whether it was up like this or sideways, it was a break and a lot of selling, possibly climatic. And so, we'll see if we get a bounce from that since it was so climatic. And, I don't know if we will, but I imagine there were a lot of stops that just got taken out right here. So we'll see if the trend continues to the downside, or in fact, we do see a bounce, at least a test to the 2550, 2575 level, possibly even a little bit higher. When it comes to the operating plan for this week, we basically got three main themes. Number one, we want to sell the rallies. So if we get a rally and on the shorter term it starts to turn, then we want to sell the rally to preserve capital. Number two, we want to preserve capital on the downside. So if our stops get hit, we absolutely want to stop out of those to preserve capital. And then finally, the third thing, which we always do, but we want to continue to do, is to look for opportunities, whether it's in the fixed income markets or in the equities markets. We want to continue to look for those opportunities. So it should be an exciting week coming into this, an exciting week for the markets this week. Short week, but exciting. And frankly, more importantly, Merry Christmas. And I hope you get to spend some time with your loved ones.